And finally, our analysis in the commodity block of currencies, where we still keep our long-term strategy in the Kiwi dollar and also in the Luni dollar. We still lose our long position in the Australia dollar, but we'll rebuy in the Australia only in case of a dip closer to the level of longer term uptrend line located around 0.76. We still suggest that in the short term run the pair should remain under the pressure, selling pressure, while trading below short term depreciation under short term descending trend line located at 78.60. So for those having a kind of long position, we advise to close your position on a possible test of this short-term downtrend line. The Kiwi dollar, where we still keep our longer strategy, we still suggest that the pair sooner or later should retest the highs of 2018, located around 74.35. You know that during this week, during last week, the pair retested but did not close below moving average 200 daily line located at 71.82, and while above of it, we still suggest that this pair has everything in its arms to resume its underlying bullish trend. And finally, the dollar Canada. The dollar Canada could break below first support zone of 128, and from this point of view we could see much higher levels, much lower levels, excuse us, while so also from both from the fundamental and kind of technical point of view. From technical point of view, the pair formed a kind of head and shoulders. As you see, the right shoulder resistance is around 130, and while below this line we still keep our short-term trade recommendation, and we are very close to lock-in profits at 128.10. Any kind of rebound in the pair should matter stronger selling interest, and we still suggest that improvement in the negotiation process regarding the future trading relations between Canada and the United States should sooner or later further support the Canadian currency. The dollar ruble is quite different the situation here. Let's see how the ruble will open the market in 15 minutes. But here the situation, despite of the higher prices of energy prices, ruble is under constant selling pressure because of another portion of confrontation between the Western and Russia, which we have at the moment. As you know, yesterday around 100 Russian diplomats were expelled from Western countries like the United States and some of European countries. All in all, this situation, of course, does not bode well for the Russian currency